Okay, anyway, yeah, very good afternoon all. Myself, Dr. Ravi Kumar. Today we are going to discuss about financial markets and services under the Diploma Financial DFM course, Deep Diploma in Financial Management, Semester 2. So here we have three units are there in the first block. We have five blocks are there. The first block is Indian financial system. Under this, we have three categories are three units are there. That is Indian financial system and overview, and financial services and overview, and also financial sector environment. These are three units are there in the first block. Now, what is Indian financial system? So far, we have see the blocks. No units. Now we can see what is the Indian financial system. Generally, it's a comprehensive framework that facilitates the mobilization, allocation, and utilization of financial resources in the Indian economy. So, any financial system that is also discussing about how to mobilize the funds, how to allocate the funds, and how to utilize the funds in the and existing financial resources. So now we are going to using that resources and also uh, resources, financial resources in the Indian economy. So if any kind of funds comes to the uh, Indian uh, financial sector, so that how we have to utilize, and if there is no proper funds in our Indian nation, then how to mobilize the funds from the other countries like Indian foreign countries. So if there is no Indian funds, we have to mobilize the funds within the India, like from the investors, from the um, uh, people, those who are interested to invest their money, and also um, and and if we are collecting the funds or mobilizing the funds, we are going to allocating into different portfolios, to different categories. And that allocation, after completion of allocation, we are going to utilize the resources in the different ways for the welfare, for the education, for the health, or whatnot. So, in multiple way, we are going to utilize the resources in the financial resources in the Indian economy. So it connects savers and investors, ensuring efficient flow and use of funds across various sectors. So not only one sector, like they may utilize the funds into different portfolios like that, education or also infra or also developmental or also railways or else any airways or anything. So where that industrially that may be useful to the organization where we can grow in terms of revenue. Now see the structure of Indian financial system. So Indian financial system, these are the entities that mediate between savers and the borrowers. So they are divided into banking institutions. So it offers various like deposits, loans, and payments. So example, State Bank of India is provides personal loans, business loans, and also uh, loans and deposit accounts. So HDFC also is the offers of home loans and online banking services. So why we have discussed about banking institutions offers different kind of services among the public, to the public, by the public. So here banking is one kind of financial institution. They are intermediaries between the parties. So person to organization. So they are going to saving that mediating the funds in between the borrowers. Now non-banking NBFCs also is there. Non-banking financial corporation. So non-banking financial corporations they provides loans, assets, financing financial companies. So provides loans, asset financing, and insurance services, but do not hold a banking license. So NBFCs generally they don't accept any funds from the public. So if they're accepting the public means they comes under the public banking sector. So, but here NBFCs are providing loans maybe personal loans, maybe education loans, maybe asset loans, maybe any kind of loans to the public. So asset financing, loans and insurance services. But here banking, these people, these NBFCs doesn't have any banking license. Example, Bajaj Finance, LIC Housing Finance, Pyramid Finance, Tata Capital Finance, HDB Finance, whatnot. So many finance companies, NB finance companies are there. So these are the comes under the NBFC sector. So here they are going to providing a different kind of loans. Depends upon one to one. So for example, Pyramid Finance focusing on housing loans mostly. Tata Capital financing on open plottings. Or else Bajaj financing providing consumer durable loans. So like that, so many NBFs are there. NBFs are providing the loans to the public. Development financial institution DFIs, if focusing on sectorial development. Example, NABARD, Sydney. NABARD is a National Agriculture Bank for Rural Development. So promotes rural development by providing credit to the agriculture sector. So in this agriculture sector, they are going to providing the loans to the public. So the those who are ready to take the loans. uh, So for the agriculture sector, so bank NABARD is going to providing the loans and promoting the loans and educating also in this sector, agriculture sector. SIDB, Small Industries Development Bank of India is providing and supporting small and medium enterprises, those who are into a business, maybe small or medium or enterprises, those who want to start up with, come with the startups. So they're providing the loans. So these are the non-banking and development banks and also bankings. So and also financial markets. What are the financial markets? Let's see that financial markets facilitate the trading of financial assets such as stocks, bonds, and derivatives. So in India, we have stock market is there, bonds and derivatives. Different kind of financial markets are there. Let's see that the money market. Money market deals with the short-term instruments. So it deals with the um, short-term instruments. So banks are um, money market. So deals with the short-term instruments. Like example, treasury T-bills. So are issued by the government for short-term funding. And the commercial papers, they're using the corporations for short-term borrowings. So these are the two kinds of things are there. And also capital market. It deals with the long-term financial assets. Example, stock market, the Bombay Stock Exchange, BC, and National Stock Exchange, NSE, where companies like Reliance and TCS traders shares. So when you see the capital market, it deals with the long term financially. So financial assets they're going to purchasing or just selling in this capital market. In the money also they're also selling, issuing that short-term instruments. But in the case of capital market, that we can see the stock market, the Bombay stock, BSE. Bombay stock market is located in the Mumbai, and also NSE, now National Stock Exchange is located in Delhi, where these companies like Reliance and TCS, all like MNC companies or corporations will trade in the BSE and NSE. So here, what is going to be happening? They are also selling their shares. They're purchasing the new shares, issuing their shares, and also some new companies are coming on these coming for this IPOs. So IPOs also that initial public offerings. So they're also selling with new concepts with a new product to the market. So bond market, government bonds is issued by the Reserve Bank of India. So this also comes under the capital market. Forex market. So forex market involves the currency trading. So currency means from one country to another country. So here, Indian companies trading with US, maybe Europe countries, maybe some other foreign African countries or whatnot. So forex is nothing but foreign exchange. Foreign exchange means exchanging the currency between the countries. So here, if any company is going to trading with some other, for example, India is trading with America or Russia. So here the currency is going to changing, exchanging, and also product will be changed and the currency will be changed. If I go to importing certain goods from US, we are paying money, currency to the Indian, sorry, US. The same way, if the US company or Russia company is going to, Russia company is going to uh, export, importing some goods from our India. So here the currency is going to changing between the two countries. One is product. Product is going to be importing or exporting depends upon the country. Currency also, if the currency, those who purchase that product from the particular country, for example, Russia, we have to uh, take their currency, like commodity market. Traders, physical or virtual commodities. So commodity two types, maybe physical or maybe virtual commodities like gold and crude oil are traded on products like multi commodity exchange MCX. So gold may be in virtual commodities, one virtual commodity. So we may also purchase the gold in online also. You can also invest in online. So there is commodity market. Then also you can also purchase the physical mode also. So physically you can go and purchase that gold in the commodity market. Now, financial instruments. What are the financial instruments? So there are some different kind of tools are there to raise in the investing money. That is equity instruments, debt instruments, hybrid instruments, and also derivative uh, instruments. So what is the equity instruments? It is the principal ownership in a company. So once we see that equity, how they are going to representing the ownership in a company. So example, shares of Infosys or Tata Motors. So that is known as equity shares. So if you are going to purchasing, okay, so if you are going to purchasing any kind of shares from the IT companies or else Tata Motors, that is equity equally, that is issuing the shares to the investors and also debt instruments. It represents a loan given to the issuer. So those who are going to taking loan, they're issuing the debt instruments like a government securities, G securities, or corporate bonds. Some corporate companies also issuing the debt instruments because if they're taking loan from the particular XYZ persons, they're issuing the debt instruments to the corporate bonds. If government taking the loan from the public, they're issuing the government securities. So all these known as the debt instruments and hybrid instruments also is there. It is combining the features of both equity and debt, like combining equity. So about equity and debt, two things comes under the hybrid instruments. So they are convertible debentures issued by the companies. So if if you are going to purchasing, if you are going to purchasing any kind of shares from the companies, who may also convert as a debentures. Debentures nothing but at the end of year, they don't bother about the financial losses or profits, but they are going to take a certain rate of interest that is known convertible debentures. So we may also convert shares into debentures or also debt instruments. So we may convert as a equity. So if you're going to become an equity shareholder, you may enjoy the profits and also you may enjoy the losses also. Two cases you have to be responsible. But in the case of debt instruments, you're not going to look about any profits, any losses or profits, but certain rate of interest is going to be fixed by the mutual parties. They are going to taking that particular interest at the end of the years. Derivatives. Derivatives is contracts deriving value from an underlying asset. So contracts. So if we are going to purchase in anything in the future, or if we are going to sell in the future, so that is known as a derivative market. So if anything, any kind of service or goods we are going to contracting in the future, that is known as derivatives. It is value from underlying the assets. So also that contract may be today's price or maybe that in 1 year, for example, if I go writing one contract, but A is there, A is ready to sell his goods to some XYZ company after 1 year. So today's price is 1 rupee, tomorrow price may be 2 rupees or something. So depends upon the mutual consent and agreement. They're going to come. They're coming to the one contract. That is derivative. So futures and options are current on indices like Nifty. So Nifty will define about the derivatives. Financial services. So let's see that we have different services offered by the and facilitated by the financial transaction like banking services. So savings account, credit facilities. So the financial services, it includes the services about banking services, investment services, and insurance services. So, uh, banking services. Let's see here. The banking services. So, financial services. So, financial services, banking services, and investment services, and also insurance services. Banking services, nothing but they're accepting the saving. They're also providing the savings account credit facilities, and also UPI payments like through Paytm or Google Pay. So they're transacting, they're sending money from one person to another person by linking with their mobile number or account number. And that's the reason we recently government of NBC has issued the UPI payment system, that is Unified Payment Interface payments by online platforms, so online UPI UPI gateways, so that is Paytm, Google Pay, Phone Pay, or Credit Pay, or something. They are also providing these money transactions like savings accounts and also credit facilities also to the credit facilities to the public. Investment services. So investment is nothing but we are going to investing money for future purpose. So that maybe in the mutual funds or also stock broking. And example, SBI mutual fund, stock trading via Zerodha. So these are the investment services. So if you are going to purchasing any kind of funds in a mutual funds category, so SBI mutual fund also offering this wide range of investment services. So certain time we are going to investing in the particular in a particular company. So depends upon that moment, maybe increase or decrease, the maybe price maybe. If the increase, they may get, he may enjoy the profits. If the profit that may decrease, he may lose the losses. And insurance services, risk coverage is there. So example, policies by LIC or ICSA Lombard. So many life insurance, general insurance, and also health insurance. So many insurance policies are there. They're covering risk insurance, especially if it comes to the life insurances. So life insurance, nothing but they're covering the risk to the public individuals. So like one of the leading insurance company is that LIC. LIC is going to issuing the loans to the public, and one of the leading ICICI Lombard, Max Life, Tata Insurance, HDFC Ergo. So these are so many insurance companies are there. And regulatory and supervisory framework to ensure the system operates efficiently and maintains the trust. So regulatory why? Because insurance have IRDA, TRI have sorry, a telecom sector has an TRI, and banks have an RBI, and also real estate company have RERA. Like there are so many regulatory bodies are there. They are supervising the framework. So they're ensuring the system operates efficiently and maintains trust. So Reserve Bank of India, SEBI also is there. SEBI also for the these BSE in the stocks, so trading purpose. So SEBI, so it monitors monetary policies and banking operations, sets reports to control inflation, regulates the stock markets and securities. So regulates the stock markets, how the stock markets is going to be fluctuating, and that's in changing in the market. So they're looking about the securities. So example, they're fairing a trading practice on Bombay Stock Exchange and National Stock Exchange. So these companies, these controlling bodies like the Reserve Bank, RBI, and SEBI, and also IRDA and PEDRA. So why these are? They are supervising and also the regulating framework. They are going to changing time to time, and uh, time to time they're providing these controlling, monitoring, and supervising the what are the policies issued, policies and guidelines to the insurance companies and also to the public. So IRDA, Insurance Regulatory and Development Authority of India, covers the insurance sector, especially comes under insurance sector. Insurance means two types of insurance. One, the first one, life insurance. Second one, general insurance. The two insurance segments comes under the insurance IRDA. Example, set the rules for policy claims. Not only claims, if any kind of issues are there with the companies or with the customers, so they were the policy holders. So the IRD will involve under their settling and then providing the proper assistance to the parties. PEDRA. So Pension Fund Regulatory and Development Authority, PEDRA. So PEDRA, it oversees the pension funds. So example, they're managing the national pension system, NPS. So how the pension system is going to be working in India in different companies. So there are so many corporations, so there are so many institutions, they maybe government or public or private, anything. They are managing the national pension system that is regulated by the PEDRA. So what is the significance of Indian financial system? So Indian financial system has one kind of importance is there. So that is they're facilitating the economic growth. So channels savings into investments for productive use, and also promoting the financial inclusion. But instead like Jan 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 Dhan Yojana and UPI bring banking to the masses. So they're promoting financial inclusion and also encourage the institutional industrial development. So funds and infrastructure parts and industrial growth. So many industrial development companies are focusing on encouraging the industrial development. So funds and infrastructure parts and industrial growth. And it ensures the stability. The regulatory bodies maintain systematic resilience. So all these, maybe IRDA, RBI, Petra. So these are SEBI all are going to regulating the bodies and maintain systematic resilience in the market. So real life examples of Indian financial system in action. Let's see startups raising funds. Scenario. A startup needs funds to expand its business. It raises the initial capital through equity by listing on the NSE via IPO. So startup companies raising funds. So that is what is the scenario here. Let's see here the scenario. The startup needs funds. So any new company needs funds to expand its business. They're raising the initial capital through equity. So we said that equity means they're going to become shareholders to the particular company. And the listing into BSE or NSE via IPO. So institution, um, initial public offerings. So the company later issues the bonds in capital markets, secure long-term debt. So they're also issuing the bonds because if anything, any due is there, so they're going to paying future. So instantly they can't get all the funds from the IPOs. Certain times they are going to uh, issuing the capital and long-term debts. So depends upon long-term debts, the companies will raise the funds and also they may have peacefulness about the financial burdens or losses because they are not going to invest in any kind of investment in the particular organization. And investors can invest in the company's share or bond um, or bonds um, and also the retail investors to invest in the company's securities. So investors can secure their uh, um, um, uh, funds, funds such as SBI mutual funds. They're pooling money from retail investors to invest in the company that is known as securities. And also regulations by SEBI. So they're ensuring the process and the transportation, the progress. So here, people or investors they try to invest money in a different platform. So if they are investing in different portfolios, then so there is a funds that must be so raising the funds and purchasing the shares or exchanging the funds in maybe goods or cash uh, and also they're also focusing on the goal is not like a goal is not like a uh, goals are different kind of things. They're running into different portfolios. So all are regulated by the SEBI ensures the process in the transparent and protecting the investors. So with this one first unit is the company under the black one. So now see the financial services and overview in the black two. So let's see the introduction about the financial services and overview. So what is financial services? It refers to the economic services provided by the finance industry, which includes a broad range of products and services which are related to the money management, investments, and also other financial needs. So any kind of financial services, uh, they used to refer to the economic services only because if there's no proper economy in the Indian uh, else, else if the person is not having any requirements, he can't go even outside also. Um, so the companies will focusing on the those who are ready with artisanal sectors. They will plan. They will continue with it organization and so the finances play a crucial role in functioning of an economy and enabling individuals, business, and the government to manage and grow their financial resources. So financial services playing so is a crucial role in financing. So the finances is enabling the mm, individuals, business, and the governments to manage their grow and financial institutions. So now see the key types of financial services. So first one is the banking services. Banking services have broadly retail banking, commercial banking, investment banking, and yeah, investment banking. So banking services. So here retail banking. So this involves providing financial products to individuals such as savings and checking accounts, loans, mortgage, and also credit cards. So retail banking provides retailing services to the public. They're going to having with the savings account, checkbook facilities, and loans, mortgages, and also credit cards, and also having accounts on it. And come to the commercial banking, they deal with the services for business, including business loans and assets management, and also working capital financing. So commercial banking playing these kind of services, business, including business loans. So in a business, if you are starting a business, they're providing the business loans and asset management and also working capital financing. And investment banking. So investment banking focusing on financial banking and services related to the capital market, including the underwriting, mergers, and acquisitions, as well as providing advice on financial matters. So investment banking involves about the if two companies are going to take up or else mergering, acquisition, they also investing fund in the sick companies. So sick companies sometimes they are going to take over, sometimes they are going to begin with the merging, and also sometimes they're acquiring the companies. So these are the banking companies. The banking means they are going to retail banking comes under bit one kind of retail banking, commercial banking, and investment banking. So insurance services offers a risk management products to individuals and business. So helping them to protect themselves from potential financial losses. So insurance, why insurance is going to be important? If any kind of risk or losses is going to be there, that we can recover in terms of money. For example, the common types have include life insurance, health insurance, property insurance, and liability insurance. So in kind of life insurance, we can see they're providing the financial security to the security to the humans beings. Human beings, those who are there, they are going taking the financial risk against the insurance. So they're taking the beneficiaries in the event of policyholders' death and gender insurance. So it includes health and auto, property, and liability insurance to protect against specific risks. So they're taking some kind of, risk health, for example. Let's take any person is going taking loan. If we get ill or else if an accident, unexpectedly that is some kind of disease is going to be there, you may use the health card. So this comes under the insurance services and risk management. The providing life, health, property, and liability. So risk is providing risk management. So this any kind of risk is going to be there. They're providing that risk by covering the insurance only. And the reinsurance, they're offering insurance to the insurance providers to mitigate the risks. So that means any kind of risk is there for the insurance companies. The companies again they're going taking the loans, insurance from the reinsurance companies. Now investment services. So these services involves helping individuals and institutional manage their investment through stocks, bonds, mutual funds, hedge funds, and other vehicles. And also wealth management and portfolio management are key areas in this category. So investment banking providing this kind of uh, facilities to the public. So they are having a wealth management, offering a portfolio management, financial planning, and investment advisory services. So wealth management, I think what it offering a portfolio management, how we are creating wealth by using financial planning and investment advisory services, and also securities market. So they're trading and managing stocks, so bonds and mutual funds through stock exchanges and brokers. So this investment uh, services, banking services, they may involve the trading and management of the managing the stocks and bonds and the financial uh, markets. So financial markets. So financial markets is comes under this, stock markets, bond markets, and foreign exchange markets. So here, stock markets facilitate the trading of equity and derivatives. So stock markets providing facilitating the trading and equity and derivatives. So you can see the bond market, they're providing a platform for trading uh, for trading and debt securities. So bond market comes to providing the platform to trading and debt securities. And so foreign exchange. The foreign exchange, so the payment gateways that UPay payments, so Paytm, PhonePe, Google Pay, all are the payment gateways. So the digital wallets and credit cards, um, uh, credit and debit cards services and also real-time settlement services systems. So all are the payment and settlement services. Now, financial technology, fintech. Fintech is about financial technologies, leveraging technology to deliver financial services efficiently through online platform. So like mobile apps and blockchain technologies. So technology-driven solutions like mobile banking, peer-to-peer lending, and robo advisory, blockchain, and cryptocurrencies. So financial technology as a fintech technology, leveraging the technology to deliver the financial services. What are the financial related services are they? They're effectively they're utilizing the online platforms. So like mobile apps or else blockchain technologies. And the technology-driven solutions like banking, peer-to-peer lending, and also robo advisory. All these blockchain and cryptocurrency comes under the financial technology, fintech. Now, see the role of financial services. So, economic growth, risk management, capital formation. So, efficient financial systems channels resources into productive investment to boosting economic development. So, efficient financial systems channels are the very important in the economic growth. So, financial services providing the one kind of economic growth and also risk management. How that insurance and derivatives instruments help in individual and business managing the financial risk. So any kind of risk, market risk, or else financial risk, or else operation risk, kind of risk is going to be there in the insurance companies or else derivative market. So that they have to understand and they have to address these issues in the financial services and also capital formation. So when capital formation, they are going to uh, provide in the financial markets and utilizing the mobile and mobilizing the savings and facilitating the funding of large scale projects. So they're also considering that long term. So what is required in the future needs. These companies, sorry, the financial services will provide this capital formation. Now, financial inclusion. So in the financial inclusion, services like microfinance, digital payments, and affordable credit aim to bring undeserved population into the economic mainstream, and also the facilitation of the trade. So financial services provide the infrastructure. So they're providing the infrastructure to the trading companies, trade, finance, foreign exchange and payment systems. It's for essential for domestic and international commerce. So the financial services providing the facilitation to the these uh, concern. So under regulation and supervision. So with this, we can see that regulation and supervision. Um, so financial services are typically regulated by the government bodies, so that we know that all regulating and supervising agencies come from the central government or central banks to ensure the stability, transparency, and consumer protection. Example, India has Reserve Bank of India and SEBI, TRAI, IRDA, and RERA. All comes under the are the regulating and the supervision bodies. In kind of global level, we able to see the Federal Reserve is there, that is there in the US, and Financial Conduct Authority FCA is there in the UK. So financial conduct, how that companies ethically doing the business and what are the authorities there to the under responsible. So these are in UK or US, these two Federal Reserve and financial conduct authorities, two are the regulating and supervising bodies in the these less level, global level. So we know global level RBI covers and regulating the banks. IRDA covers the entire insurance companies, and SEBI covers the stock exchange board, stocks or securities, and RERA covers the um, real estate. Petra covers the pension system, and also TRI covers the telecom uh, system. So all these comes under the regulating systems. So this I'm going to stop him today. So again, we'll continue tomorrow the same session. Thank you.